All right, in the meantime, to billionaire investor Ken Fisher on all of this impeachment stuff. Ken said something interesting lately, always says something interesting. Multiple best-selling author, 11 or 12 books by last count, multi-billionaire. He says circuses don't kill bull markets. I think he was referring to that process of impeachment. Ken Fisher, good to have you.
Always good to be with you, Neil. Thanks for having me.
All right, so this is a circus?
Well, you know, when you look at a lot of it, it kind of sounds like the name of a PR firm, sort of like Winkin', Blinkin', and Stinkin'. It's a lot of wild claims, and, you know, when you look, there's the congressional part, and then there's the presidential aspirants, and lots of people saying lots of stuff, which is, if you think of the aspirants, at this point, all of the ones that are not riding at the top of the polls actually have to say a lot of extreme stuff to hope to get up in the polls, because there's only 4 months until Iowa and New Hampshire, and after that, if they're not up, they're dead. I mean, not literally dead, but you get the point.
I get the point.
And then on the congressional side, this is all this one big jiggering about the House and the Senate, with the elections, you know, very center of mind, and you know, a handful of states that are in very swing condition in the Senate that has very big import for 2021 and beyond. So, yeah, it's a circus, but it's not an unusual circus. It's just a little more extreme. Normally, markets in the third and fourth quarter of the third year of a president's term, and often in the first and second, have a lot of this wild to them that grinds on the market, and you used the word uncertainty. Markets don't like rising uncertainty. They like falling uncertainty. And as we move through that process, it tends to funnel down eventually to where it gets clear that one or two are the potential nominees, and then eventually one, and then eventually it funnels down to the market pre-pricing, because it usually does, who will actually win in the end, and that's all falling uncertainty. So I think for a while we can have a kind of a bull market that continues, but begrudgingly and grinding, the way a lot of this bull market has
what would
for a
keep
decade
it continuing,
now.
Ken? What would you? Because I think you had said that it's not a great world, but it's an okay world. Is an okay world enough to keep the averages moving forward?
There's all kinds of good things going on, most of which nobody focuses on. Right now, people are focused on the bad. In Europe, people are focused on the bad, but in fact, earnings are improving. Corporations in Europe have had lots of time to batten down the hatches about every potential known negative, whether it's got to do with interest rates, whether it's got to do with Brexit, on and on and on, and they're doing pretty well, and nobody notices. The election cycle in the European world, and I've spoken about this before, is actually positive. The aftermath of EU elections has a very strong history of being positive, because people fear in advance the EU going crazy. And the populist trend in Europe is also positive, because we've got, for the first time in history, pan-European gridlock virtually everywhere, as the populist left and populist right have risen and the center parties have lost relative power, and you can't get coalitions that can do anything because everybody hates everybody, which is bullish for stocks. May not be bullish for what somebody wants.
Nothing gets done in that environment, right?
Nah, you think about this like an obstacle course. The part about gridlock that's beautiful is, in business or in life, you're kind of moving through an obstacle course, and when there's heavy legislation and lots of things being done, it's like a obstacle course with big, sharp, fast-moving, unpredictable obstacles, and you move through it kind of looking around, being real cautious. When you move to gridlock and that gets stabilized, the obstacles get stabilized, you start moving through faster, things pick up, people get more optimistic, progress is made. And we've just entered that world in Europe. People don't realize that. There's all kinds of other, I make the point, which I've made forever, we haven't had a negative third year of a president's term since 1939, which was only down 0.9% going into World War II. And in fact, we've only had 4 negative years in a fourth year of a president's term. Normally, the negative years in American political history are in the first and second years of presidents' terms, of which almost half of them are negative, because that's the period of rising political uncertainty tied to the fact that legislation actually goes through almost all, people don't get this, but it's true, almost all big legislation in American history, modern American history, since the beginning of the 20th century, is in the first 2 years of presidents' terms, creates rising uncertainty about what they might do next.
So that environment still persists. The reason in this latest environment, we have all the trouble with some of these IPOs that Peloton, of course, is stumbling out of the gate, and Lyft and Smile Direct and Uber, Blue Apron. I think you would refer to IPOs not as initial public offerings, but it's probably overpriced. So maybe they're getting their comeuppance.
Yeah, and
so you don't worry about the lousy reception these guys have gotten because the lousy receptions seem to be outnumbering the good ones.
Flip that on its head, Neil. Think of how positive that is and what it says about sentiment. I mean, if you go back to John Templeton's line that I've quoted on your show before numbers of times, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. And if IPOs are generally going flat, that tells you there's not that many of them, and the ones that are mostly going flat. That says we got a lot of sentiment room. That's a bullish feature. People don't recognize that as a bullish feature, but when IPOs don't do well, when pigs don't fly, the reality of that is that it's fundamentally bullish.
Yeah, because they're not being frothy. They're holding them to a tougher standard, right? And that's a good thing.
Oh, duh, and that's good. Yeah. That's good. You know, if you think about what we just saw in the not quite public world with the WeWork discussion and all of the things that went with that, that's actually a positive feature because it said, okay, so you got these crazy venture capital and private equity guys that did all this stuff. Okay, they do what they want, but when you get to the public market, they couldn't fly it. That's bullish, not bearish, because it's a statement about sentiment having lots of room to run.
You know, last time I had you here, we were talking a little bit about Elizabeth Warren's wealth tax. A number of other candidates have come forward with versions of their own, including Bernie Sanders, who wants to force that on companies if they have an X number where the CEO is paid what he calls an ungodly amount over the lowest paid worker. There's going to be a surtax on them, surtax on billionaires like you. Joe Biden apparently is kicking around something similar. You ever feel like Custer, that they're all out to get you?
Oh, no, I really don't. I don't think that way, and I don't think actually anybody really should. As I referred to earlier, at this stage, presidential aspirants say a lot of stuff, hoping to gain ground. Biden, who's been, kind of slipping, needs to find something to buoy that. Sanders, who is otherwise a guy that had a lot of enthusiasm last time, but kind of, not playing this time as strongly as he did last time, needs to come up with some spark that gets him going if he's to go. So he floats this and he floats that. There's a lot of floating and nonsense that has to go on between now and New Hampshire. And the reality is,
you don't think that if any one of these people
can,
sorry to jump in you there, but any one of these people become president, that they're going to try to find a way, I guess it depends if they get the House and or Senate with them, to do that, to go after a wealth tax, because any other like marginal hike in rates isn't going to do it, to pay for what they want.
So I'm skeptical there. I'm not certain. And let me show you the difference between skepticism and certainty. Think about it this way. How many presidential nominees that have won the election have ever accomplished even half of the things that they promised they would do when they were campaigning? Most of them haven't accomplished almost any of them, because most of the things they said they'd do, by the time they got the nomination, they stopped talking about. In the end, whoever the Democratic aspirant is that gets the nomination has to go to the public and compete for the center of America. And the center of America is not rowdy and extreme. And they have to. They're not. My guess is a lot of this rhetoric now, by the time you get to the middle of next year, goes away. And in fact, if you take something like Sanders' wealth tax, you couldn't get that through Congress if you had to, unless you had the Democrats take a huge majority of the House and the Senate. And then if you take Sanders' desires. It's not totally clear that's even constitutional. I don't take this stuff as you just take what they say and accept that's what they do, because presidents have never much done that.
Yeah, it's hard after they get elected to put that, if they get elected. Always good seeing you, my friend Ken Fisher, multiple bestseller.
Thanks for having me.
So many books, so little time to talk about. 12 of them, ones that stand out in my mind. Markets Never Forget, Debunkery, The Only Three Questions That Count, and on and on and on.